Hello option traders, this is Mike at 10 Delta Trading, and today I just wanted to show you the mechanics of how to place a 10 Delta short strangle trade. So a short strangle is selling a call and selling a put that are going to bracket the stock price essentially. I'll explain more about the strategy in a later video. So right here we have I use TD Ameritrade. Their Thinkorswim platform is probably the best out there. I've tried a few. Today, let's see, I won't go over that, but I'd like to put a trade on Airbnb. It's been good to me the last few weeks. Today is Tuesday. It's about 3:30 p.m. The market's going to close in 30 minutes. And I'm going to see if I can put in a trade that'll still get me 1% per day for the next 3 days. That's the metric that I shoot for. So I'm in the 28 May expiration. If you were to close this, you could look at next week and you could pull up all the following weeks and months. But let's look at 28 May. Let's build this out from the put side first. So over on the puts, let's look at the delta column and scroll down to about 10 delta. Now this strike is at 9 delta, but I also like to keep this probability in the money column up, and we see there it's about a 10% chance of being in the money 3 days from now, which means there's a 90% chance that it won't be in the money. And since we're selling it, we want it to stay out of the money or not go below this 126 strike, so we'll make money. So the easiest way probably to set this up is right here on the bid, because we're looking to sell, so we got to find a bidder for this thing, and someone's bidding 29 cents for it. So we're going to right click on this and sell a strangle. So right there. So now TD Ameritrade, Thinkorswim, pulls up this order for us to sell a strangle. There's sell strangle, one contract, a call and a put in this week's expiration. There's that 126 I chose. What they did is they just put in the next strike higher, the 127, which is the 127 call. So you got to slide over here. That call is in the money and it's worth, I don't know, 760 or so, 770. We don't want that. What we want to do on the call side, delta column, scroll down to about 10 delta. So this one's at 11 delta, but right at 10%, so I like that. If that were higher, like 12%, I might come down and pick the 9 delta. But this is good right here. 11 delta, 10% in the money probability, so 90% out of the money. So we slide over here, we see that strike is 143. So now we just come down to our call. Be careful there. 143. And so that's the 10 delta strangle that I want to sell. Now you see that Thinkorswim populated a price for us that we could maybe sell this thing at. If you look down here, that's the midpoint. Look, it just changed to 70. While this padlock is unlocked, you're going to get whatever the current market price is. 70 is the midpoint between the bid-ask on each strike. So you take those midpoints and then add them, and that's how you get 70. But if you take the bids on each one, then you get this natural price of 66. So we can definitely get a fill here at 66, but I like to eke out another penny or two. So I'm going to go to 67 right there in the middle. And you see the padlock locked when I did that. Or right here at 69, the mid price, if I lower it here to 67, I get the same effect. The padlock locks and lets me put the order in at that price. So if I go to confirm and send, right here is how I calculate rate of return. So this trade, if you remember, we're asking for 67 cents to sell these two options. There's the max profit, $67, but there's always commissions. TDA, 65 cents per option contract, bought or sold. And there's two here, right? We're selling a put, selling a call. So 65 cents twice is $1.30. So you take the max credit, subtract that, you get 65.70. So I'm going to load that in my calculator and divide it by the buying power effect. This is the collateral that TDA is going to hold for us to make this trade. So they're going to lock up 1864. So I'm going to divide my net credit by 1864, and I get 3.5%. Well, it's 3:33 Eastern. There's exactly 3 days left, so that comes out to 1.1% per day. And that meets my metric, and by the way, that's a really great return if you can do that over 250 trading days in a year. The next thing you would do is come and figure out how many contracts you want to sell. So what you do there, this is a paper money account, but that's up from 55,000 just 10 and a half weeks ago. But anyway, they tell you to never put more than 5% of your capital in any one trade, any one stock, right? So 5% of 100,000 is 5,000. So from this buying power reduction, if I buy one contract, they lock up $1,800. If I buy two, it's 36, right? 3 is 54, and 54 is over my 5,000. So I might want to go back and say, okay, the most I want to put into this trade is 2 contracts. And now watch, here's the total credit again after commissions. Look how the commissions doubled, right? It was 130 before, but we're doing twice as many contracts now, so it's 260. And if you were to divide this number by this new number, you would come up with that same 1.1% per day, 3.5% for the whole trade. So let's go ahead and say send. And right here, this says the buying power I'm about to use was from a trade that sold off at a profit this morning. So it's money I took in from a trade today. I can use the money, but I cannot buy this trade back, close it out later today, because that'll give me a day trading hit, and that's not terribly good. So I say, yeah, I understand all that. Confirm and send. Now, if that were to go through right away, there it is. We sold that Strangle on Airbnb. We can confirm that here with filled orders. I have this sorted by execution time. There's A, B, and B. There's the time. We sold the Strangle to open, right? We opened these contracts. It was this week's expiration, 3 days from now. These are the put and call strikes. And this is the credits we got for each leg of that. But most importantly, this 67 cents is the credit we got for the whole trade. Now, what you do with that is, let's find it. Here's our A, B, and B. That wasn't there before, right? And there's the positions we hold, 2 of each of those contracts. So if you click on one of these, it'll turn blue. If you control click, they'll both turn blue. So if I right click now, create closing order, choose this top one. Let's buy back that Strangle at some price, right? We're going to put in an automatic order to buy this thing back. I like to use 75% of the profit, right? So I forgot what I got for that, 67. So I take 67 cents, I times it by 0.25, a fourth, right? Because I want to leave that much on the table. And I'm getting 16.75 cents. So we're going to call it 17 cents. So now you're going to come down here and just change that to 17 cents. Be careful there, because sometimes for whatever reason TDA TOS changes that number. So if you like that, here's the most important thing. Change this day, because right now if I put this order in, then in 23 minutes when the market closes, this order is just going to evaporate because it was only good for the day. So I'm going to make it a good till cancel GTC order. So this order is going to stay on that trade until it either hits this price, or I cancel the order, or we get to Friday expiration and the price of the Strangle hasn't come down to that. So I hit confirm and send, and we can look it over here and then send. Now watch this. Go back to the monitor trade, and boom, where before we didn't have this out here, now we have this buy order. Okay, so I can click on that and see that that's my buy order for the 2 contracts of those 2 puts and calls, and there's that 17 cents limit that I put in. So Hopefully in a few days, the price of this spread will come down to 17 cents. This order will automatically execute, and I don't even have to look at it. That happened today with MSTR for me. And as you have orders on, you see I probably have 18 or 20 on. You'll have that happening every day, and so you'll just go in and put new orders on. So that is actually how you place a short strangle order on Thinkorswim. And this is a strategy I've been tweaking for about 10, 11 weeks now, and it's been working real well. And I've got a website over at 10deltatrading.com. It doesn't look real fancy just yet, but I've been tracking all my trades every day, starting last Wednesday, the 19th of May. So come over and check it out. Thanks.